Hey, what's up, y'all? What's up, man? It's your boy Dylan the Day Trader. I'm back in this thing. Got it here coming for y'all. It's a new series. Well, it's really a new lesson. It's not a new series, it's a new lesson, okay? So we done with the back to the basics. Now we into something new, something different. And I want to keep progressing as I tackle these different topics. I'm just going to just work you guys along, little by little. So I started from the beginning, and I'm gonna continue to just go down the line to, more advanced things. So as long as you're watching my videos and you're staying up to date, you shouldn't be lost. But if you are, feel free to comment, feel free to DM me on Instagram at Dylan the Day Trader. I'll get back to you. I definitely will get back to you as soon as I can, as soon as I see it. So without further ado, we're gonna get into a little we're gonna get into something. I'll let y'all check it out. We're gonna get into the next video. So yeah, let's get it. Boom. What is the foreign exchange market? So I know if for those of you that this is your first video tuning in, appreciate y'all, man. Appreciate y'all showing support and welcome. I touched on this topic in the back to the basics part 1 video. So it's like the probably two or three videos back. I touched on this in depth. So check that out. I'm not gonna go too much in depth into this, but I will let you guys, you know what I'm saying, let it sizzle on your brain, let it marinate on your brain, and just talk about what, this side is saying. So what's the foreign exchange market? The foreign exchange market is better known as Forex or FX. Forex is simply the market that allows you to trade two currency pairs against each other to profit. In Forex, you want to, basically take a buy position when the market is at a low price point, and you want to take a sell position when the market is at a high price point. So basically, like they say, you buy low and you sell high. So with Forex, you can make money on the buy and on the sell. All right. 'Next, the Forex market is open for 24 hours a day, 5 days a week. So that's really Sunday evening at like 5 o'clock p.m. to Friday evening at 5 o'clock p.m. So really, it only really has one day off, which is Saturday. One complete day off is Saturday, and on Friday and Sunday, it's like a kind of half day. When you was a kid, you got to school half a day. But yeah, they stopped doing that though. You got a little roguish breaking and stuff. But that's neither here nor there. A new day in Forex starts at 5 o'clock every day. 5 o'clock p.m. every day. So what I mean by it starts at 5 o'clock every day. So okay, so Sunday 5 p.m. the market opens. Our trading day will be Monday 5 p.m. the next day, and vice versa, and so on and so forth. So, and then second trading day will be Monday at 5 p.m. to Tuesday to 5 p.m. That's the second trading day. Then the third trading day will be Tuesday 5 p.m. to Wednesday 5 p.m. So it's a pattern, ongoing pattern until Friday at 5 p.m. hits. That's when the market is closed, and a new trading week will begin Sunday at 5 p.m. So exchange rates. Exchange rates are basically what allows the market to basically move, believe it or not. So exchange rates are the price that you pay to exchange your money from your current currency that you have right now to another country's currency. So if you want to trade it, the GBP, Great Britain Pound, I'm always going to use GBP USD because that's a pair that I trade. That's my pair. So if you want to trade your GBP, your Great Britain Pound to the US dollar, that's the exchange rate in between there, and how you would basically get a profit. All right. So these exchange rates is what allows us to make money in the foreign exchange market, like I said before. And exchange rates change by the second. So that's what allows the market to be very volatile, because it's always fluctuating. Exchange rates never just stay the same. Even if, like, the market is consolidating one day, The market doesn't consolidate at one price point. It's never be just like consistently staying still at one price. Nah, it'll consolidate. It'll go up and down, up and down, up and down. It'll probably be like 4 or 5 pips. It's moving up and down, but guess what? It's moving. All right. How big is the foreign exchange market? So the foreign exchange market is one of the biggest financial markets in the world. That's why everyone wants to have a hand in it, because it's so volatile, and it also is the most difficult to trade, right? So how big is the market? Is $6 trillion a day gets traded into the foreign exchange market. That's a rough estimate from the time of this recording right now. So the market ain't gonna do nothing but continue to get bigger and bigger and bigger and bigger. Okay, so the best way to profit from the foreign exchange market, like I said before, is taking a buy position at a low price point and taking a sell position at a high price point. So what is actually traded in the foreign exchange market? So you're not actually trading like money in the foreign exchange market. You're basically buying shares in a country's economy. All right, so I'm gonna break that down for y'all just a little bit. Break it down. All right, so this like in the stock market. In the stock market, what are you investing in? Companies, right? In the foreign exchange market, you're investing in countries, more so countries' currency, because that's the way you'll basically be able to profit in the foreign exchange market. You're taking shares of somebody's basically economic monetary currency, right? So when you're in the foreign exchange market and basically you watching news, all right? So you watching news, and the news that happens in a certain country's economy is basically what allows the market to fluctuate. So like if a president speaks, an election, a war takes place, things of that nature, that will kind of like affect that company's currency. Not company, that country's currency, right? So just like in the stock market, like just like news inside that that company comes out, say Apple, they about to drop a new iPhone 13 about to come out, right? So we know every time they drop a new phone, guess what? They shoot up. Their stock rises, right? Same thing with a country. Depends on what the news is and what happens in that country at that certain time. It will allow you guys to know kind of what the market is going to do. So that's why it's good to be up to date and current on news in a certain country that you're trading, right? So the most heavily traded currencies are the US dollar, the euro, Japanese yen, the Australian dollar, the Swiss franc, New Zealand dollar, and Canadian dollar. The better the economy is for that country, the stronger their currency. So that's why basically the US dollar is traded more than any other currency pair in the world. All right. So just like I was telling you guys, these are a few things that can affect the economy, and I listed below. So like I was telling you guys before, there's certain things that moves the market in a certain direction, or that will affect a country's economy, which are politics, interest rates, natural disasters, a war, unemployment, and exports and imports of like goods. Okay, so boom. So when trading in the foreign exchange market, we trade currency pairs. So what is a currency pair? Currency pairs are two currencies that are traded against each other to make a profit. So for example, I have the euro, which is one currency, and another currency, which is the US dollar. So both of these separately are just a currency, but when you bring these two together, they are called currency pairs. And also we have another one called USD CAD, so call that UCAD, which is the United States dollar with against the Canadian dollar. Okay, so there are different pairs that are traded, the ones that are kind of traded the most, is what I call the major pairs, right? So there are over 100 different currency pairs, and I know many of you would like to know which pairs are the best ones to trade. So my recommendation, I highly recommend you stick to the major pairs. So the major pairs are basically currencies that have USD in them. Because like I told you guys before, the United States dollar, you know, the US is like basically one of the most, we're one of the richest countries in the world. So this would make sense to trade pairs that are paired with United States dollar. Well, it makes sense to trade currencies that are paired with the United States dollar. All right, and this is a list of these right here below. Next, we have the cross pairs. Cross pairs are any pairs that do not have US dollar in them, right? So the most common cross pairs are the JPY, GBP, and Euro. So the Japanese yen, the Great Britain pound, and the Euro. Okay, so for example, cross pairs. So this right here is what would be called a Euro cross pairs, Euro crosses. So the Euro crosses are anything that has Euro in it, basically Euro, Euro, CHF, Euro, GBP, Euro CAD, Euro AUD. So basically anything that has Euro in the front. So a GBP cross pair would be anything that has GBP in it, right? So you take out the Euro and you just put GBP, right? So that would be basically how you tell what kind of crosses pair you are trading. All right, so I went too far on that one, but we're back. We got the exotic pairs, okay? The exotic pairs are any major currency pairs that are paired with an emerging economy. All right, so emerging economy, basically like, you know, Mexico, Singapore, you know, Sweden, Norwegian. These are just a few, okay? So these are just a few basically exotic pairs, and which I don't recommend you trade exotic pairs at all, because exotic pairs are like, it doesn't even make it that percentage of the market, just a small percentage. From what my notes are, these are just a small percentage, right? And they're only of the 20 plus exotic pairs that you can invest in. So it's not that many of them. But if you want to trade, you want to like figure it out, play with them a little bit, feel free. All right, so hey man, this basically is the end of this video, right? So let me make myself big real quick, y'all. So this is the end of this video. Okay, so I got some more coming for y'all. I got some more videos coming for y'all. I ain't went nowhere. I just been on my grind. Got some more videos coming for y'all, man. I appreciate y'all tuning in and staying up to date, staying current, man. And me just allowing me to, you know, come into your electronic device, your phone, your laptop, your tablet, and just being me, and to be able to teach y'all a little something that I know. So hope you guys learned something today. And if you did, feel free to press the like button, comment, share this video with, you know, a friend or family member, and subscribe so you guys can be updated when I post some new videos, man. You know what I'm talking about? Let's get to it, man. I appreciate y'all tuning in. Always remember, keep God first, man. I'm always gonna say that. Keep God first, man. Because if you keep God first, man, everything else is gonna fall in line, right? All right, so your boy doing the day trading, man. Out this thing, man. Love y'all.